Well, we have entered a period of what I call Cold War 2.0. It's different than what we have seen in the past with the first Cold War, because now we have effectively two alliances, one around U.S., the Western Alliance, and one around China, more recently really formed under the BRICS Plus coalition. The difference now is not a competition about political philosophies, but democracy versus socialism, but it's really all about growth and control of technology. And so there are different sources of uncertainty going forward, but also there is less cooperation in matters of security and peace. And that's potentially a very dangerous aspect of this time in our days.
Interesting. So the last 12 to 18 months has been obviously having its mind, one end of its mind focused on the geopolitical conflicts, which hopefully might come to an end, if not in days, then in weeks and months, if Donald Trump is to be believed, right? If that problem ceases, and if the real problem might be, let's say, tariffs, higher rates, counter tariffs, and a polarized world around trade, how big a problem could that be, or is that a solvable problem?
Well, so far, since the Second World War and since the end of the Cold War, we are accustomed to living in a world really underpinned by unfettered free trade, globalization, and peace. These three pillars of support are now no longer in place, or they have been challenged. And so I don't think that this is a temporary thing, but it represents more of a regime change in the way the world operates. I don't think that it's something that will end from one day to the other. Certainly we're going to be facing increasing trade barriers, increasing issues with competition around technology, and we have already seen a few hotspots around the world of conflicts. The question is whether Trump will be able to really stop these conflicts, or whether they will shimmer going forward.
Okay. Now let's assume that for a moment, a hypothesis that there is some allaying around the geopolitical fears around the geopolitical side, but there are surprises in Trump 2.0. If indeed tariffs are surprisingly higher, and if they are followed by counter tariffs from all sides, and if that is inflationary in nature, which it likely will be, are we looking at a year wherein interest rates and therefore cost of capital might actually surprise on the upside? And what would that mean for a growth-starved world?
In my mind, tariffs is a tool, is a negotiating tool for Trump. I believe the priorities of the Trump administration are America first, the supremacy of the U.S. dollar, and the dominance of the U.S. in the technology sector. So long as it can achieve these three things, tariffs will not be particularly disruptive. So it's more a matter of negotiation. On the other hand, many of us are accustomed to living in a world of low to zero interest rates that were partly due to the consequences of the financial crisis, but also a high level of financial repression due to monetary policy from around the world. That type of accommodation and QE, as we know, has been reversed. And so the expectation that we will be faced with very low interest rates going forward doesn't necessarily make sense. And we should expect the yield curve to basically rise and have an upward sloping yield curve with some risk premium in the long run.